Test 1 2 1 2. What's going on, team? It's Ricky with Technical Solutions. Hope that you guys are all having a good Sunday. Welcome to our Sunday Stock Talk. We host these every single Sunday, so make sure that you guys subscribe to the channel. I go live and I break down the top 10 stocks that our subscribers see value in. Friendly reminder, if you guys want to stay connected, we also do run a free Discord chat. We have over 40,000 members, so if you want to join that, that's going to be that first link down below. So I don't want to take too much of your time this Sunday. I was looking at the NASDAQ futures right now. And NASDAQ futures are up a little bit over 0.5%, which is a great sign for TQQQ. Looks like as of right now, if the market were to open, that we would definitely be in the green. So it's a great start to the week as of now. It doesn't mean that the market has to open up this way, but I'm very excited to follow up and to see if we can continue with what's to come and to see if the market actually begins to make signs of a recovery. One of the things that you guys have to be aware of is that market is still very, very oversold. Yes, it can continue to sell off. There's a series of meetings that are going to be happening this week, and just make sure that you guys, again, subscribe to the channel, turn on your post notifications. I'm going to be uploading new videos every day, updating you guys on the different Fed meetings and or speeches that are set to be set to take place. So let's go ahead and go right to it. I really hope that you guys learned something new in this video. And if you do, please consider dropping a thumbs up. So let's go ahead and get right to it. One of the one of the things that I quickly wanted to do is I wanted to look at the markets tab and actually talk about some of the stocks that are going to be reporting earnings this week, right? So we have the 16th and we have, let's see if we have anything significant reporting earnings. No, not off the top of the list. We got Walmart reporting earnings on Tuesday. We got Home Depot reporting earnings on Tuesday. On the 18th, we got Cisco, Target, Lowe's reporting on Wednesday. We have Vips, let's see, Kohl's, Ross, and then Friday, we have Deere & Co., Foot Locker. Okay, so nothing too significant. All the tech stocks already reported earnings. That's what we saw about 2 weeks ago. So, Kurt's Garage, I'm from Memphis. I like it. What's up, what's up? Alrighty. So, do you prefer Webull over TOS? I do. I don't know about you guys, but I feel like Webull looks much more interactive. I feel like the platform itself is a little bit more useful. They have a couple more tools and resources that is available. If you guys want to download, you guys don't have to use Webull. It's just my preference. But if you guys do want to use Webull, make sure you click the 5th link in the description, and you will actually earn 5 free stocks once you fund your account. You can even just fund it $1 and you'll earn 5 free stocks. And again, let's go ahead and get right to it. So no one cares about AMC. Yeah, AMC, also known as meme stock, hit lows of $9. It has not traded to lows of $9 ever since it originally took off, right? Surpassed, hit highs of $72. This is a perfect example of a glorified pump and dump. You can say whatever it is that you want of this. It's, this is why we made the videos back then of do not get caught holding the bag. This is why risk management is so important. This is why your hopes mean nothing in the market if there's no structure or discipline with your trade, because it does, you can choose to be a part of a movement. You can choose to hold in hopes that the shorts haven't covered or whatever it is that they were, feeding themselves. But this is a perfect example of, putting yourself in an unfortunate position and hoping for the best and not preparing for the worst. So let's go ahead and actually talk about stocks that are worth investing in. So we'll start off with NVDA. So let's go ahead and break this one down. NVIDIA, very bullish stock overall, big picture. It began to sell off towards the end of 2021. We could see that it hit lows of about 160. NVIDIA as of right now still really isn't indicating full signs of an uptrend. If we look at this on the 4-hour time frame, we could see that it always almost gets rejected at the EMA line. And one of the things that we can tell is like, one of the questions that I like to ask myself, especially either if you're deciding to trade and or invest, is like, are you missing out by not being invested right now? And not really, right? Because you might be like, well, look, we could have bought it at 155. The goal should never be to predict the bottom of a stock. The goal should just be to get in when it makes sense, when it's a good price, when you see upside potential, and when your upside outweighs your downside, right? Direction is a very important factor that I'd like to pay attention to. And I still think, in my honest opinion, NVDA has a lot to prove. We're still trading below the moving average, below $200 a share. So therefore, if you decide to want to get in early, all power to you. I understand why you're choosing to buy the dip on NVIDIA, especially with how it used to trade before. But you can't expect it to recover anytime soon, especially as it's been so bearish. This thing does have great upside potential, and we can get a little bit more into it, but it has 93% upside based off of the current price point. So again, because it has so much margin to work with, the way that I view it is like that should only encourage you to maybe even wait for confirmation. You don't need to be a perfect trader to, be able to make money in the market. Just make sure that there's a reason behind everything that you do. Don't just buy because you can, buy because it makes sense, right? Those are simple questions that you can begin to really ask yourself. So one of the things I would definitely look out for is waiting for confirmation on that. Let's go ahead and so NVIDIA is soon to release new GPU video cards. I like that. Yeah. All right, so we got Kroger, we have Boeing. Let's go ahead and break those down. So I'm going to start off with Boeing. Boeing is definitely one that I've been paying a lot of attention to. I just feel like the airline industry has been getting hit time and time again. It has a lot to prove. Again, asking yourself that very simple question, are you missing out by not being invested? No, right? You're probably saving money by not being invested in Boeing right now. It's been struggling, and it struggled back in 2020 during the pandemic. It tried to recover, and it's been selling off ever since. Direction is simply not in your favor. It doesn't matter what we hope happens. Get your emotions out of it. It's not about that. It's asking yourself a simple question. Remove yourself from the position and be like, hey, is this something actually worth investing in? Is it showing signs of a recovery? Is it indicating signs of higher highs? Am I missing out by not being invested? And that's definitely not the case. So we can re-update these alerts, and I can set my alerts back over here. But I also want to make sure that I stay up to date with where it's trading at. So as of right now, the way that we view it within Learn Plan Profit is if it's bleeding, let it bleed. The cheaper, the more it sells off, the cheaper you can get it for. So let's not forget about that. Kroger, let's go ahead and break that down. Kroger is, I don't know if you guys knew this, but Kroger is one of the stocks that has been performing exceptionally well, especially even with current market conditions. It's, in my opinion, a little bit more on the overbought side. It has some pullback potential. That's on the day chart. We can see on the 4-hour time frame that it has pulled back a little bit from $62. But if you look at this on the day chart, if it breaks below $50 a share, you can see that it has a nice little gap down all the way down to $47 a share. The way that I view Kroger is not necessarily for a trade, but more of like a long-term position. And as of right now, it looks like it's kind of retracing back to the moving average. So that's kind of what I would look out for. You can wait for the break back above the EMA line on the day chart. If it begins to indicate signs of an uptrend and you want to partake in that, great. But I'm sure you guys can all see that we're testing that support level right around $50 a share, really $53. And if we break below that, it wouldn't be much of a surprise if we drop all the way back down to the moving average right around $47 a share. So let's go ahead and move on to the next one, Netflix. I'm happy to break Netflix down. I cannot stress this enough. Netflix had a pretty nice run. I think it's the way that it ended the week. Netflix has been selling off for a year, and it's not showing any signs of a recovery. Look at the day chart, right? Oh, I'm sorry, not for a year. My apologies. Since the end of 2021. Been selling off, lower highs, lower lows, and it's not just a little sell-off. I mean, look at it, from $700 all the way down to $190. It lost 73% of its valuation. That has to be for a very valuable company in the billions. This has to be one of the biggest loss in market cap in the shortest period of time. overall, right? I know Facebook dropped in a day and it lost $220 billion, but I'm talking about losing 73% of your valuation. That's insane, right? And I do agree with a lot of you guys. Netflix is very oversold. It's very cheap. But guess what? The cheap can get cheaper. And the past 5 months have taught us that. So instead of hoping that Netflix begins to recover, how about we do something crazy and just set alerts and wait for confirmation? Instead of acting because you can, do it when it makes sense. It's about being calculated, right? And holding yourself accountable when no one else will. Let's go ahead and move on to the next one. So Amazon. I personally broke down Amazon. I actually made a video and I actually got really good feedback off of it. So I don't know if you guys watched the video that I uploaded yesterday. Amazon is one of the stocks that I'm investing in. I plan to buy a total of 75 shares, which is about $170,000. My average purchase price, my goal is $2,300 a share. My average exit I'm working towards is $3,300. So I plan to exit right around this general area of the moving average. I don't plan to sell all of it there. I would be more than happy to hold more of my position. But again, if things begin to go according to plan, I would love to add more to my position on Amazon. The more it indicates signs of an uptrend, the more that I would average up. And then my potential ROI, the risk to reward ratio is 3.33%. And then my total potential profit for the dollar amount invested is $75,000. Again, in a perfect world. It's never going to go perfect. So that's just the goal. It's something to work towards. I'm very excited to follow up. With that being said, I'm choosing to buy and invest in Amazon while things are still uncertain. I'm never going to be here and speak like other people on YouTube and try to convince you that you should invest in the same stocks that I'm investing in. If anything, my job, and I think the Learn Plan Profit group can speak for my actions, I always try to, if anything, encourage you to be more conservative, to wait for more confirmation, to not trade or invest in the same things that I do. I want you to be your own person, right? I think that's the beautiful thing about the market is that, yes, I think it's important to learn the core values of investing and trading. And yes, that can be easily done in one way, but that's just the foundation. The goal is to build off of that, to be your own person, to be your own form of trader, to be your own form of investor, right? And with that being said, yes, I think Amazon's a great stock. I do think that although things look promising right now, it can definitely still continue to sell off. So if your intention is to make money right now and right away, don't invest into, I wouldn't expect you to invest into Amazon because Amazon's going to take months, if not a year or two, maybe to recover, right? And with that being said, is if you can't tolerate that, then don't buy it. Don't put yourself in a position that you can't tolerate. Have a realistic approach, right? If you want to make money right now, then trade something that's going up right now. And Amazon just isn't showing that, right? It's been very bearish, at least for the past year, and rightfully so. So has all of tech. It's been selling off. There's no surprise there, especially with interest rates going up, with trying to fight inflation. It's common sense, right? So put yourself in a position to succeed. It's not that you have to be perfect. It's not about that. No one's perfect here. The idea is to put yourself in a position that you can simply tolerate, where the reward outweighs the risk, and you understand that. Swing trading versus day trading. It's all preference. It's whatever you prefer, right? We have a lot of people that are part of our Learn Plan Profit group that are students that have a full-time job and that simply swing trade on the side or day trade on the side. And we have other people that do it full-time, right? It's not that one is better than the other. It's that find whichever one accommodates your lifestyle better. That's the goal, right? It's not to be, I don't want you guys to be, copycats of me. What's the goal with that? It's, again, be your own person. Don't be afraid to be your own person. Have your own style, have your own taste. We don't have to see eye to eye on everything, but we can have a level-headed conversation and understand one another. You get what I mean? So ever consider trading options? I do not, but I appreciate you asking. Please look at NVDA. We actually just broke down NVDA. I appreciate you asking. CHPT. Alrighty, CHPT looks like an amazing pump and dump, right? It shot up to highs of $49, and this was in late 2020, and it's been selling off ever since then. Lower highs, lower lows. This is a perfect example of a stock that I would not invest in. This is the exact opposite. If I can get this picture and reverse it, that would be the ideal image of something I want to invest in. Yes, there is potential money to be made, just like in anything, right? It has these nice little rallies. It has these nice little rallies, and it looks like it might be setting up for a nice little rally. I think that's great. You have to understand that if you're not the best at, averaging up, if you're not the best at managing risk, trading something when the direction is bearish, you're putting yourself in a more difficult, position, because your entries and your exits have to be more effective. And if they're not, and you suck at managing risk, it's a recipe for disaster. So if you suck at managing risk, and I'm being, straight up with you, I would not trade anything that is selling off, right? Especially if it's been selling off for nearly 2 years. Let's go ahead and move on to the next one. What are your thoughts on Riot? Let's go ahead and break it down. It should not be doing really well. Yeah, pumped up. Riot blockchain. I'm not a fan of any of these companies. It's been selling off, not just since the beginning of 2020, but it's been selling off ever since it peaked. You can see the trading volume has really declined. There's no direction. There's no, if it's consistently selling off. So at least I give it that. This looks like a great setup for something that I would potentially want to short, right? It's, again, don't sell yourself the stock. Don't sell yourself the dream of, hey, I want to make money on this. Who cares? Like, what you want it to do. It's not doing it. And it hasn't done it. And it hasn't done it for a year, right? It's been consistently selling off. It's the exact opposite of what growth looks like. It doesn't mean that it can't change. It just means that it's not doing it, right? Set an alert, and instead of selling yourself the idea, let it happen, right? Set the alert, wait for confirmation. If it ends up playing out, then follow up with it. That's the whole point of creating an effective watch list, accountability, and having the discipline to follow up with that stock. So what else are we going to be breaking down? DKNG. I'd love to break that one down. Okay, we got DraftKings overall was very bullish, and trust me, I love the idea of DraftKings. I'm right there with you, with a lot of you guys, where like I think DraftKings definitely has the potential. If you think of what the company is and the potential for it to continue to grow, amazing, right? I just do not think that the direction is currently in its favor. I think that although I have a goal for it and I would love to invest in it, my goals mean nothing, right? It's if direction is not in my favor, I need to understand and respect the market. And I think that's what's most important. What's going on? Okay, my Instagram, for those that are maybe unaware, my Instagram got hacked. It got hacked and then it got disabled. We're working on getting it back right now. So right now I have no Instagram. So any Instagram that's Ricky Gutierrez right now is fake. So if you guys can do me a huge favor, I have one Instagram account. Right now it's disabled. It's Ricky Gutierrez with 2 Z's. It's linked in the description, but you won't be able to see it. Report every other account that you see. I know it's a lot to ask because you have to go on Instagram, but please, please, please understand that I never message you first. I don't trade for other people. I never ask for money. I never use WhatsApp or any foreign Forex, Bitcoin platform. I don't do any of that. Those are all fake. Please, please report them. My account got taken over and disabled by a fake account. So very unfortunate. And if you guys can do me a solid, I'd love to follow up once I get my Instagram back. But as of right now, I can't even go live if I wanted to. So I appreciate it though. DraftKings is definitely a stock that I've been paying attention to. The way that I view DraftKings, I'm not too sure if it's just me, but Carvana just announced that they laid off 2,500 employees, and Carvana's been tanking. Carvana, the owners, are the richest people in Arizona. I live in Arizona, so I know a lot about them. They're one of the largest used car dealership sales-wise in the world, in the United States. I think that there's great potential, great opportunity, but guess what? Carvana is selling off from $376 down to $28 a share. It's not about what I want Carvana to do. It's about what it's doing. And right now, yes, it's cheap, but like the past 5 months have taught us, the cheap can get cheaper. So there's a difference of showing interest in wanting to invest in something and then actually making sense of that investment, right? Later down the road, I would love to eventually build a house, buy a lot of land, build my dream house for my family. But I also have to understand that based off of current market conditions, it's probably not in my best interest to do that now. But guess what? The beautiful thing is that I have time. I have time for conditions to get better. We have time for conditions to get better for Carvana. You don't need to invest into them. Invest and trade when it makes sense. Yeah, it's an insane drop. But again, it's unfortunate for everyone that was invested. But for people like you and I, there's huge ROI potential. And guess what? We don't need to be perfect. We just need to make sure that when we take action, that it makes sense. And as of right now, things are getting worse for Carvana. So let the sucker bleed. Let it bleed. Let it go to $10, whatever it is. I want to buy it when it makes sense. So just like DraftKings, I would love to buy DraftKings. Oh, another good example is Robinhood. Robinhood has been selling off ever since, it really peaked at $80 or $90. I don't even know what it was, $85 a share. It's been selling off. No full indication of a recovery just yet. It had a nice little gap up because of the announcement of of a billionaire investing $650 million. But again, that's all hype. That doesn't change anything about Robinhood. That's all hype of just getting more attention, more demand for a short period of time. You need to understand these reactions. There's a difference from when there's a fundamental reason on why something is pushing and rising versus an artificial reason of something that's going to be a short-lived catalyst. So Upstart, another great example. You guys are doing great with these today. I feel like I'm providing half of the list, but another great example of a stock that was set to do very well. I was trading at $400 a share during the very peak of very end of 2021, and it's been selling off ever since from $401 all the way down to $35. Think about that. It sucks for everyone that was invested, but for people like you and I, this is a potentially great opportunity. But guess what? At least for me, not now. I want to see this sucker begin to indicate signs of an uptrend like this. I want it to be bullish. That's when I want to invest. Yes, I want it cheap, but I don't need it at the cheapest price. I don't care about that. I'm so beyond that. I want to buy it when it makes sense. When it's actually when I look at Upstart, I want it to feel like I'm missing out by not being invested. That's what I want to feel. Not, oh, I want to catch it now because it is so cheap. I don't care about that stuff anymore. I feel like that's something that attracts a lot of beginner traders, a lot of beginner investors, people that don't understand that you don't need to be perfect with your entries. You don't need to be perfect with your exits. You're never going to be perfect. The goal is just to be effective, have an effective entry, have an effective exit, make sense of it. Never perfect, but there's a reason behind it. That's what's most important. So I love Upstart. I love the potential that it offers. It's just not it for me right now. CRM, another one, Salesforce. So let's go ahead and check this one out. Salesforce peaked at $311. Right now it's trading at $167. Another great example of a stock that was doing very, very well and has sold off quite a bit, 86%. But again, it's bearish. It's consistently selling off. Why overcomplicate it? Why would I throw money into this when it was cheap last month? It was cheap the month before that. It was cheap the month before that. Who cares? Let it bleed until it begins to actually indicate signs of a recovery. Then it would begin to make sense. Until then, I don't care. Let it go to $100 a share. Let it go to $50 a share. The cheaper it gets, the better it is for people like you and I. Zillow. I don't know if you guys have followed up with Zillow, but Zillow, significant drop from lows of $208 down from highs of $208 to lows of $34 a share. Think about that. Think about that potential. Insane, right? And this is Zillow. This is an application that we all use, but it's been thing after thing of like interest rates going up. Obviously, less demand for the housing market makes it less attractive, which means probably less users, right? For Zillow itself. Zillow also announced, rightfully so, as a business, it canceled and closed down their home buying program. Rightfully so. It just didn't make sense anymore. The market wasn't going to continue to rise like it was during the pandemic or shortly after the pandemic. It's a strong business decision, and I like that about Zillow. Just their stock is very bearish right now. So I love the recovery potential. I just think that this is a watch. It's not a buy right now, at least not for me. All right. So Snowflake. Yeah, so that's Snow, right? Yeah. Snowflake, also very cheap based off of previous highs. Used to trade at highs of about $400, is now trading at $150. Very bearish, lower highs, lower lows. And I can't stress this enough. Again, another great stock with great ROI potential. Just tech is getting hit really hard. And I think, this live stream, I think we did a really good job in today's live stream showcasing and highlighting how many stocks are oversold, how many stocks offer great ROI potential, but also how many stocks are still bearish and they can continue to sell off, right? We don't know how long this is going to last. We don't need to. Your job isn't to predict the future, it's simply to prepare for it. This is why I've been trying, I don't know if you guys, and you guys have to tell me, I don't know if you guys have been enjoying it, but going back to the basics, and I made this like little calculator thing. It looked like based off of yesterday's video that I uploaded, where I'm talking about the stocks that I'm planning to invest in. I don't know if you guys like those videos. It seems like you guys do, but I want to showcase to you guys firsthand what I'm doing to prepare for the future, for the recovery. Not that it has to happen, but you know what I would hate to happen? The same thing that happened back in 2020. When the market recovered and you were overwhelmed and didn't buy anything. You didn't invest in anything because you were so scared. It's like, why are you investing in the market then, right? If you can't tolerate risk, what are you doing here, right? You're not guaranteed anything. That's not what the stock market's about. You don't deserve anything. You can invest hours and actually end up losing money. It's not about that. The way that we get paid in the market is in direct proportion in our ability to overcome the challenges that it presents, right? The patience, the discipline, the structure. You think on Friday when I made $40,000 due to my TQQQ position, it's not all profit, but still $40,000 in a day. That's huge. That's great. But you think I made that because I worked really hard for it? No, it's not about hard work. It's about putting yourself in a position to succeed. And then making sure that not only your upside is covered, but that your downside is managed. That's your job as a trader, as an investor. It's not to be perfect with your entries, with your exits, that you invest in every stock that has the potential to recover. It's not about that. Keep it simple. Focus on one. Focus on two stocks. Add them to your watch list. Obsess about them. And take action when it makes sense. Not when you want to, not when you think something's going to happen, but when it makes sense. That's your job as a trader. That's your job as an investor, at least in my opinion. So also just a little heads up, this little calculator is all available. So like if you guys ever want to plan out any of your trades, this little calculator is available in our free Discord. So if you guys want access to this calculator, it's in the announcement section. You guys should be able to see it. Let's see if I can pull it up. In the announcement section, it's right here. It's the Excel file, the risk to reward calculator. It's all available. It's all free. Also, if you're part of Learn Plan Profit, you have access to it as well. But it's in the announcement section. I actually think I'm going to update it. I know I need to open it up, and I added this other section to it. So I'll update it, and then you guys can have access to it. So again, all available in our free Discord if you guys want that. That's the first link down below. And yeah, I mean, I don't want to take too much of your guys' time. I think we already went through 10 different stocks. I think I'll do one or two more. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We've done 14 stocks. Let's see what else is good. Let's see. All right. Okay, that's actually a really good one. I'm actually really happy that you brought that one up. Lyft, I don't know if you guys have seen, but Lyft has really been struggling just like Uber. Lyft very bearish, trading at $20 a share. $20 freaking dollars, right? It's insane. But that's not what we're here to talk about, right? Because it even sold off back in 2020, but we're approaching pandemic levels, which is great. This is great opportunity. This is where you have to shrink your list of interest. You know, even in just today's watch list, we talked about 15 different stocks, and that's just what we talked about. That's not where you're going to break down, right? We didn't talk about Uber. That's down. What else? What else do you guys want to break down? Someone else said it. I was looking at it. Shopify. Shopify is insanely oversold, right? Look how oversold Shopify is, from $1,700 a share down to $300 to $400. Huge opportunity. You know what I want? You know what I think would be amazing? Being able to look back and to see that no, you weren't perfect, but that you stuck to one or two stocks. You waited for them to indicate signs of an uptrend. You took action. You averaged up. You made mistakes, but you learned so much along the way. You know, the way that I would do it is I would put enough money in the market to take it seriously, but not so much that if you were to lose it, that it would make you super emotional. I think that's an amazing way to focus on learning how to trade, where you don't trade with too much that it overwhelms you and then it takes away the focus of learning. Your focus should always be learning first, and the making money part comes later. But again, very few, and this is just how life is, very few people hold themselves accountable to that degree. And my question is which are you? Are you someone that's going to take it seriously enough to learn from your mistakes, to take time to practice? You know, I have 2,000 free videos on YouTube, and that's just my channel. There's a lot of other people that upload videos on YouTube. Watch them. I'm not gonna tell you that, oh, you only need to watch my videos. I don't care. Watch other people. I think I provide great value, but that's me, right? I have a specific way that I trade. I have a specific way that I invest. I encourage you to explore other people, to test what you learn, to practice what you learn. My only goal for you is to surround yourself and work with people that encourage you to be the best version of yourself. That's what I think is the goal. That's it. So I don't want to take too much of your guys' time. I'm excited to follow up with the market tomorrow. We're going to be going live. If you guys want to join us, I trade live every morning. I would love for you to join me tomorrow at Market Open. If you think that it would be of value for you to watch me trade live, have access to our A to Z video lesson library, you get access to my HQ, and you get access to our private group chat. So anytime that you have any questions, I'm one message away. But again, during our live trading sessions, I'm either trading and or answering questions in real time, right? It's kind of like this, but imagine the market being open and you can see me trade. All right. So if you want to learn more about that, to see if our Learn Plan Profit group is a good fit for you, that's going to be that second link down below. But no rush. Again, please make sure that you guys understand that my Instagram as of right now is hacked and disabled. So every Ricky account on Instagram is fake. If you can do me a solid, please report every Ricky account that you see. Spam the comments, whatever it is that you need to do to make sure people are aware that those accounts are fake. That would mean the world to me. They block my real account, and then they just disabled it. So, all right. I appreciate you guys' time. I hope and wish you guys a green week. Please take time to shrink your watch list, to stay micro-focused on what you value, what makes sense to you, and how you plan to make money when the market recovers. Keep it simple. Not perfect, but just progress. I think that should be the focus for this market recovery. Progress, and know what you're doing. Have a reason behind what you're doing. So I'll see you guys tomorrow in tomorrow's live trading session. That's going to be that second link down below. And if you have any questions, you can comment as well. Like always, let's make sure that we end the year on a